The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day is Corporate Travel Management. Now, the company has posted a 42% drop in first half net profit to $29.2 million. However, it will be paying out an unfranked 10-cent interim dividend. That's also down from 17 cents, and has bought back $52.3 million worth of shares under a previously announced $100 million buyout. But the first half results were generally ahead of expectations, with FY25 earnings guidance downgraded as well, down by 2.3%. So guidance worse than expected, at least in terms of what RBC Capital Markets was expecting, with the rest of the, or in the UK, I should say, with the rest of the world broadly in line. So, interesting one to watch on this day. It also expects slower government revenue, but the share price is up by 9.4%. Andrew Wielandt, I'll start with you on corporate travel.
I think the market was perversely looking for a worse result. And if you have a look at the percentage of the company that's short sold, so in other words, investors taking a view that the share price will fall, it's remembering if you short a company and you get the call wrong that the share price is going up, your loss is unlimited. So if you go to short a company, the result is actually better than you expect. Share price rallies, you're madly in there trying to cover your shorts, you're buying them back, and I suspect that's a lot of what's actually going on today. There's a fair bit of short covering taking place, because if you actually look at the underlying business, certainly the last 12 months, it's down about 13% total return, and even if we sort of go back to the last 5 years, it's made around 2% per annum, so it hasn't exactly covered itself in glory. It's also one of these, Nadine, hockey stick companies. So what I mean by that is that the earnings are skewed towards the second half, which again, if they perform, fantastic. But it certainly does put a lot of pressure on management as well. And a lot of the business, it's hard for them to control. You know, they're being positive relating to their European business. They're being positive relating to their North American business. But, you know, they've got a fair bit of the target under control as well already relating to revenue. But yeah, it's certainly not one that I'm super interested in, paying 19 times earnings for a business that's returned 2% per annum over the last 5 years. It's certainly not a sell. I mean, the chart's looking better, but I don't think from a fundamental point of view, I'm not super interested. So it's a hold.
Thank you. Any opportunity for you, Henry, in corporate travel?
Nadine, I guess this is just another one, as Andrew says. You know, we've seen a few of these recently where the results come out and they are better than expected. They're not particularly great, and expectations were particularly low in a number of cases. The same, I guess, applied for Domino's, where there was a big short position there, and that one went on an almighty run. The same thing happened the other day in Ordinate as well, which had a big run as well. And now we've got corporate travel joining that. Again, you know, they did beat expectations. The shorts cover, we may see a little bit more short covering in the next day or so, but then they do tend to come back to earth a little bit. You know, we've got Ordinate down nearly 6% today, and Domino's has given up a lot of those gains that we saw on that day. The result from Australia and New Zealand was pretty good. The result from the US was okay. The result from the UK wasn't quite so bad. They are seeing those budget cuts from the UK government on travel spend impacting the first half of 25. So that is something to bear in mind. But you know, it's not a bad stock. But as Andrew says, you know, it's priced for growth, and really it isn't doing a lot of that. It's provided FY26 revenue and EBITDA guidance target of 10% growth and margin of 30%. Yeah, I mean, it's sort of upgrading a little bit of guidance there, I guess. So that maybe justifies why it's up 9.3%. But yeah, I think at these sort of levels, it's a hold. I still kind of prefer Webjet in some respects, and that was a stock that I looked at a little while ago after they sort of fell down to the sort of $4.20 level, and they've clawed their way back. So maybe that's one to have a look at. But interestingly, I was just doing a comparison on Skyscanner, just on fares to Europe this summer, and they are remarkably good value compared to previous years. I have to say, even on the likes of Etihad and Emirates, and we'll get onto that later when we talk Qantas. But I know the advert for stock of the day is that, benefit from the volatility in the US market, but let's face it, we're having a fair amount of volatility in the Australian market as well. NAB's 7.5% down. We've got the Light and Wonder up 10.2% today. So we're starting seeing volatility and corporate travel 9%. For me, it's a hold here, but we could see another couple of days of positivity as the shorts continue to cover. There may be a slide back.
So it's a hold for corporate travel management. Our stock of the day.
Yeah.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.